Listen up. Are you a college student and did you have a job last year? If so, you may want to file a tax return this year. At Denary, we're Ivy League trained and passionate about financial literacy. We have your back on all things finance and ultimately want you to have the tools to reach your financial goals. In this video, I am going to walk you through when it makes sense for you as a college student to file a tax return. Quick disclaimer though, this is not legal, tax, accounting, investment, nor other professional advice. Please consult with a CPA and do your own research for your individual tax situation. So, needing to file taxes depends on your income and whether you had taxes withheld from your paychecks. Typically, if you earned more than the standard deduction, which was $12,950 in 2022, you are required to file an income tax return. This refers to earned income that you would get from a job, for instance. Alternatively, if you had unearned income, so that comes from investments or a trust, of at least $1,150, you are also required to file. But what if you had a part-time job on campus and made less than $12,950? Should you still file? If you made less than the standard deduction, you may want to file a return if income taxes were withheld from your paychecks. You can see this if you received a W-2 from an employer that shows federal tax withholding. In that case, you can file a return and actually get money back. In fact, the IRS recommends filing a tax return in this scenario because you may be entitled to a refund. The most important thing you need to do if you are thinking about filing a tax return is confirm with your parents or guardians if they plan to include you as dependents on their own returns. One of the biggest mistakes young adults make is not getting on the same page with their parents about being claimed as a dependent. Parents can claim you as a dependent if you are under 19 or if you are under 24 and a full-time student. Now, this is the most important part of the video. Parents can claim you as a dependent even if you file on your own. When can this happen? If you are a dependent but your income exceeds the standard deduction. An example of this would be if you're still a full-time college student but your summer internship paid really well last year. Or if you earned less than $12,950 but still choose to file a return to receive a refund of withheld. So let's say you worked part-time or over the summer and earned less than $12,950, you would owe nothing in taxes but could still file to obtain a refund. Or if you earned $1,150 or more in unearned income, such as dividends or interest, there's a possibility that your parents might be able to claim this income on their return, but there's still some restrictions on this. Or last scenario, if you earned tips or made more than $400 in self-employment income, you will have to pay Social Security or Medicare taxes regardless of total earnings. So, bottom line, get on the same page with your parents or guardians about your situation. If your parents claim you as a dependent, all you need to do is simply indicate that someone else can claim you as a dependent in the appropriate section on your return. Here are some things to keep in mind that are unique to college students. Double check your taxable income, as some scholarships or grants are taxable if they are used for incidentals such as room and board or travel expenses like study abroad. If you have student loans that are accruing interest, you or your parents might be eligible for the student loan interest deduction. And lastly, you or your parents might qualify for either the American Opportunity Tax Credit and the Lifetime Learning Credit. I don't want you leaving money on the table, so check with your parents or legal guardians and think about filing even if you made under $12,950. And if you do plan to file, don't forget to check out our video on how to file your taxes for free. As always, hope this is helpful for you and don't forget to share with your friends.